Hello and welcome to the Core 4 Show. I'm Coach Brandon Adams. I'm your host. And so today we're going to have another fantastic show about how we can create wealth for ourselves, create independence, and also live the life that we want to live. And how do we do that? We keep custody of our money. And so unfortunately, a lot of people out there still don't get it. And so even today, I had a wonderful call with someone who was super passionate about how we can give our money to this particular platform and they're going to get us 15% a month. But guess what? You got to bring in all of your friends and family. And she was just so excited and so passionate. And the people are in Austria, Albania. I don't remember where she told me they were from. And so she's telling me all of these things, and nothing led me to believe that there was any proof of revenue. Nothing led me to believe that there was any proof that the income that I was giving was actually going towards, whatever whatever they were doing. And then finally, which was even more important than anything, is you had to leave your money locked for 90 days. And the idea was that you would bring in a bunch of people so you could get 3 times your investment. And then they were given loans, and then they were doing this. It was just so much of it just reminded me of how much I love Core 4. And how much I don't have to listen to all of the jargon that goes along with what people are talking about. And what are they really talking about? Oh, give your money here and you can make X, Y, Z. Look, you can make just as much or better keeping custody of your funds. There's only one person that I actually trust to give my money to, and that's Chris Pulver. And so you guys are about to see him on here today. And the reason is because the transparency, his relationship with the government, the licensing, all the rest of the stuff that Chris goes into, and he still gives you a heck of a return. And there's so many other options out here as you guys learn how to invest. And so we had a situation last week, a final situation where, there was some misunderstanding about what Core 4 is all about. And I want to really clarify that. Number one, Core 4 is by design for all of us. And so if there are multiple traders out here or there are multiple coaches out here that can do a good job, it is the coach's job and responsibility to be consistent on a regular basis, to be knowledgeable, and to be able to express themselves in a way that you as a community want to participate with those coaches. And so our job is to show the testimony and the relationship that we have as Core 4 with those coaches so that you can see that they are successful and the decisions that you would make with your money are yours alone. And then once you get their courses, then you would then on your own time take the courses, learn, invest your hard-earned capital into whatever the product or services that we're providing, and you get your own independent results without any of us getting a piece of, an affiliate of, or anything of your money and the hard-earned time that you have. So that's what we are all about. So anything else, it's just not going to work. So at this point, we only have one binary options coach, and that's India Bradford. And so I wish Coach Vaughn well. He can come on as a guest. You guys are still welcome to buy his course. If he's still willing to offer a discount for Core 4, then we would love to have him. And I do believe that, the results that he has gotten since January has just been absolutely phenomenal. But we stopped coaching and working together this past week to bring a yield, so we will not be reporting on that. So I wanted to open up the show with that so that we all kind of know, anybody that watched the show last week, just to make sure that we're all on the same page and we're having fun. You can make money, you can have fun. Be the best version of yourself, be a subject matter expert, and surround yourself with people who inspire you. That's what I live to do every single day. That's what I want my family to do, and that's the legacy that I leave behind and what I want to generate with more than just my direct family. Hopefully it resonates within you. So today, without further ado, we're going to bring on one of the sharpest minds, and really we have two of the sharpest minds, but the idea that we have them collectively here and they actually start us off with our show. And let me see, I got to make sure my banner is up here. So the core forecast. So we're going to bring on Chris Pulver to the stage. Chris, how you doing, big guy?
I'm doing great, Brandon. Happy Sunday.
Man, how's your basketball game?
I haven't played, man, since that broken arm 6 weeks ago.
I know. I just want to give you were testing it just to see if it was still looking good. You
Not
still
yet. I need to be 100% before I'm doing anything stupid like that. So I'll get there eventually.
so you'll ski before you go play basketball. Is that what you're telling me?
Maybe I might. I'll probably. I'm trying to golf before I play basketball.
That's a good thing.
We'll find
All
out.
right, let me let you do your thing, man.
All right.
You're
Thanks. Can you share my screen with me, Brandon? Perfect. All right, everybody. This is where we're at so far. So, market forecast year to date, S&P is up 9.89%. Just to put that in context, we're off to a great start, as everyone knows and sees and reads about and sees in the major headlines and the talking heads. Bull market. There's no getting around it. We're certainly in one. We've been in one since basically the bottom in 2022, which was late October, and we had another big rip, coming in October of 2023. But how good is this start? Well, to put into context for the S&P 500 all time, this is top 15 all time. So almost a century of the S&P 500 were in the top 15 as far as gains the first 56 trading days of the year. The only times in modern history, I'd say the last 20, 25 years, that have been better than this would have been 2019 and 2012. I was surprised that 2017 wasn't in there, but 2017 wasn't a gangbusters like growth year. It was just every single month was consistently profitable with green in the S&P, and we had a big crash in 2018 at the end of the year. So just I want to repeat that we're off to a great start, right? The S&P is up 9.89%. It's being outpaced by a couple of sectors. You can see communication services and energy and financials and industrials, and even technology is actually taking a back seat to just the overall broad market. But it's nice to see that essentially every sector, utilities, of course, underperforming. Utilities will perform well in a downturn or a contraction, which most likely is not going to happen anytime soon until we get some election drama or higher geopolitical risk. So the broad market, and I'll put that lightly, like broad market is rallying. There are certainly instruments doing very well. We had a rebalancing the S&P 100 or the S&P 500 as well. SMCI made it into it, and that actually dethroned Nvidia as the top performing stock because SMCI was up like 200 and some percent for the year so far. And Nvidia, of course, is number two, and then you've got Constellation Energy and Meta at 3 and 4. Top 25s. I always report this in the core forecast. The S&P top 25 was 4.34% last week, just by that concentrated top portion of the S&P versus the broad market at 2.29%, which was still a huge move. I mean, having any week in particular where a certain week is up, over 1%, 1.5%, that's a great week in the markets. And just broader markets last week were up 2.29%. But the top 25, again, that concentration at the top, 4.34. The NASDAQ, the top 25 outperformed 4.96% last week, which is a big jump versus 2.98 for the broad market. Still, nearly 3% in the NASDAQ last week was really, really good. The Russell, the broader market did 1.6. The top 25 actually underperformed 0.94. So like I said, again, top 15 all-time starts in the S&P going back to when it first started back in the 1920s. And then it's top 3 in the last 25 years, with those years being 2019 and 2012. How did Streamwise do last week? Pretty well. It was a great week, actually. SPX, SPY, XSP, DIA, QQQ, all gains last week. I had a couple of hypothetical earnings plays that I wanted to trade, but I had a decent chunk of profit all week. That I'm like, I'm gonna price it in. I'll put a hypothetical in. The earnings plays, all three out of three would have paid out, but I don't trade in hindsight, so it doesn't matter. It was just I do my thing, price it out. It was Lululemon and FedEx and Nike all paid pretty well on some big earnings plays, up or down. And then I had a small loss on Micron. Tried to pin a butterfly spread on the earnings report, and it blew through earnings like 2 standard deviations, and so I took like a 35-cent loss, which is no big deal. In other news, we also went into, let me show you the heat map from last week. This is the broad market. This is the heat map of the entire week, so you can see that most things are green. Interesting that Nvidia was up 7.35%, but AMD was down 5.97. Google made a big comeback as well. Apple finished flat. Apple's being sued by the government for monopoly stuff. Google and Apple are working on potentially a collaboration to be, I don't know what you're going to call that, synergetic, but they're clearly lacking innovation when they're losing out to some, more nimble technology stocks and certainly semiconductors. But Apple's still, I think, an attractive company with, one of the largest market caps in the world. That it is number one, but also at a 20+% discount as well. So we'll see how that, maybe find some footing around 170. Amazon's doing pretty well. Google's off the lows at 130, but you can see most of the market last week advanced with green across the board. We also had some drama in the central bank world. The Bank of Japan came off negative interest rates for the first time in over a decade. Now, that's coming from negative interest rates to positive. All right. Did the Japanese yen get crazy strong last week? No, it did the exact opposite, which wasn't a surprise. And I'll tell you why. The market still likes risk on trading. The market is still in a carry trade environment. Just because the Japanese yen goes from negative 0.1% to positive 0.1% does not change this environment that we're in. Positive swap, positive carry. You can get paid to hold positions. You can get paid to borrow the Japanese yen effectively, right? At first, you're getting basically paid at negative 1% to get paid to borrow the Japanese yen and put it anywhere else in the world to have that profitable arbitrage. So even at 0.1%, it is dirt cheap to borrow in yen, and you can put it anywhere, i.e., U.S. stock market, right? The Nikkei has been growing like crazy as well. We're at all-time highs for the first time in 34 years. So it still is a great currency that's fueling these gains and fueling this momentum. And until we go into a true risk-off environment, the Japanese yen, in my opinion, will continue to stay weak, and this carry trade will continue to be strong. But give it 12 months, give it 24 months, and this will probably unravel in a big way. And I think as we get into 2025, I certainly would be looking to play more, Japanese yen strength, risk off trading, try to find some reversion to the mean on some of these big gains and runs we've seen. So the BOJ comes off negative interest rates for the first time in a long time, over a decade. The Swiss National Bank comes this week and actually cuts rates from 1.75 to 1.5. And the nice thing about this was every central bank, the ECB, right, the European Central Bank, Bank of Canada, Bank of England, Reserve Bank of Australia, Reserve Bank of New Zealand, all these central banks have raised rates to the point where there's pausing. They don't want to raise rates anymore. They don't have to raise rates anymore. But the Swiss National Bank, it was nice to see that they decided to cut rates. And so we had this big surge in the Forex market where the Swiss got really weak. That helped a ton of my positions, which was awesome. And it also, for the time being, increased a lot of the swap that I'm getting on those Swiss franc pairs. And I also liked it because finally a central bank was willing to take the cuts ahead of the Fed, which the Fed right now, after their meeting on Wednesday, is likely going to be cutting rates in June, again in September, and then most likely in November. So we're expected to see 3 rate cuts from the Fed this year, summer and fall. And we'll see if the Fed sticks to their word and stays consistent with that. But that remains to be seen. But as of right now, the market is expecting a cut in June. We've also had a bunch of other central banks cut rates this last month. There are a lot of emerging markets, the higher inflation markets: Argentina, Brazil, Chile, Czech Republic, Hungary, Mexico. They've all cut rates in 2024. So my point is this: the overarching theme is countries have raised rates high enough, they're starting to cut back. The Fed this year is starting to cut back. I don't know if that's going to be good, bad, and different for the market. I still think that if we have dips and corrections, which I expect to see in the markets, this will be a good thing. And I'm pretty sure that the bulls will continue to buy in dips. So this week's trading will be short. We have Monday through Thursday. We have Good Friday. So the U.S. markets will be closed. Forex and crypto obviously remain open. But we keep pushing all these green candles on the charts. So let's see if this week, with the end of the quarter, is going to notch a new gain and we finish the quarter at just another all-time high, or if we give some of it back and we actually erode some of those gains that we saw last week. So I'm positioned for both of this on the SPY, and I'll be looking at taking positions on the SPX this week. I'm just thinking the timing might be a little bit tricky since it's a shortened week with a holiday on the 28th. So we will see how that plays out. But I'm positioned for either or. We get a $6.5, $7 move on the SPY, I'll make money. We get a 50-point move in the SPX, I'll make money. So I think that's very possible, very doable for the markets on a week-to-week basis. That's it. Thanks.
I love it. That's great. And so when you take a look at the market and you start to forecast, are you forecasting out for the year and then you work your way backwards, or how does that work, especially off of technicals?
Yeah, it depends. I mean, I'm pretty diversified with all the different approaches that I take. I mean, I essentially have long-term goals for this year where I'm starting positions that go out to the end of the year. I have positions that run out to December to January of next year that I'm essentially I've got a single direction on those. So, for example, I'm bullish on Bitcoin, I'm bullish on gold, I'm bullish on silver, I'm bullish on the Russell. I'm bullish on the SPY right now, but I'm aggressively trying to lower the cost basis on all those instruments that I just mentioned. So if I'm long, I'm not just directionally long and that's it. It's a one trade and I hold. I am actively lowering the cost basis on all those trades. So as an example, I got into a long trade on the SPY this year. I bought a $500 call and I was already up after like 2 weeks of holding that thing. I was already up like $10 a credit. So I took that credit, reestablished a position. I'll continue to work the cost basis down. And even if I'm taking chunks of like, $5 credit, $10 credit, it all adds up to the bottom line. So I think what's nice is it certainly feels a lot better where I don't have to play as much defense. I'm a little bit more comfortable, having some directional plays in, going out longer in time. But I still think that, what I tend to do is I look at probably 1 to 2 weeks as my like very narrow focus. That's like where I get to the granular details as far as forecasting. All I play around, Brandon, is volatility, which this market is very capable of giving us good volatility every single week. So 1 to 2 weeks out, short-term trades, let's say, 45 to 60 days out, cash income generating strategies, and then 12 months out, longer term, big gains, asymmetrical upside, things like that. So, I've got some short term, some medium term, some long term, and I play a little bit of each. Now, really quickly before I go, this
Yep.
might be crazy. But if I look at the SPY and the SPX, all I did was connect this high from 2018 to the high in 2022. Now, I'm not forecasting a certain price. And here's the deal. If you're going to forecast something, you can't give time or price, right? You got to give one or the other. You can't give both. So I wouldn't be surprised if we are stretching up. And I'll throw this out there. Like, technically speaking, I could see the S&P 500 getting up to like 6,000 this year. Now, that's a huge, ridiculous target. And if we hit that level, I will be a bear going into 2025.
Right.
But I do think that we are needing a correction desperately as far as the technicals are concerned. But I think that right now the path of least resistance continues to be bullish. The Fed clearly cemented a bit more of a dovish tone this week with FOMC. So I do think the market loves the momentum. The market loves the growth. Let the good times roll, as they say. And I think for right now, it's like that's what I'm going to play. If it's not broke, don't fix it. If the floor is not falling out, I'm not going to get bearish. So
Yeah.
I'll just continue to play volatility and let the market do its thing.
Well, I like the fact that you're talking about the fundamentals that you're introducing with the technicals and how you kind of really have to have both in order to be effective as a trader.
I do. I mean, I don't believe in buy and hold. I think passive investing is ultimately going to hurt the traders longer term because let's say that we have this great run this year and we go sideways, right? We have this great like 10% head start. Market gets up 15-20%. Then we have a big pullback and the market's sitting around 10% for the year. You have to remember this. Everyone's all excited about this direction. The reality is the S&P 500 annualizes about 8% a year. We're already up 10%. So going forward for the rest of the year, even if we inch higher and melt up higher, I don't know how big that gain is. As we get up to, if the index is up 15%, 20% or more, man,
Hmm.
there's very few examples of it doing that every single year consistently, right? I mean, so going forward, if we are up 20% in the broader markets, I'll be very cautious as a trader. Like I'll be cautious as an investor. I will be protecting my profits. I will be making sure that I'm properly positioned for any type of like snappy downside moves. But again, that's active portfolio management, which is what I do. I think if I was just a buy and hold trader, worst case scenario is this. If the S&P goes sideways at any point where we put in a top and all of a sudden we have a big, 15, 20, 30% drawdown, that might take years to get back to those all-time highs. It just happened, right? The peak in 2021 to the all-time highs that just got broken in 2023 and 2024, we had a 2-year drawdown,
Right.
right? US investors are conditioned for like the market just goes up, goes up. But the reality is it doesn't have to go up. We had a 2-year drawdown where investors didn't make any more money. If you were at your all-time watermark high in 2021, you had to wait until really the end of 2023. And now you're like, oh, sweet, my investments are paying off, and I stay in at a dollar cost average, and I'm a long-term investor, right? But nobody likes to be in a drawdown.
Yeah.
So I'd rather be making money in a 20% downturn like it did in 2022. I'd rather be making money and time the market a little bit better like it did in 2023 and this year when the market just seems like it can't do anything wrong, you know.
Yeah.
So, but you got to be well rounded. I mean, if you want to beat the market, look, if you believe in efficient market hypothesis, you want to beat the market, cool. Just buy the S&P and walk away. But I want to beat the market with a lot of alpha. I want to beat the market with as much gains as possible, but keep the risk also very, very tight and very conservative. That's not easy to do. That's a challenging balance. But the good thing for me is I trade options. So I mean, I'm always trading defined risk, and it makes my life a lot easier. Where I can have a lot of trades running. And like for example, last week on Wednesday, I closed 192 trades for profit. So I've got a lot of stuff going on. But point is, when those close out, now I can reestablish, and that gives me more buying power, more margin to start playing around and reestablishing that portfolio again.
That's beautiful.
Yeah.
Thank you, buddy.
All right. Thanks, Brandon.
All right. And James, I know you took a little time there. I know you're patient with us and stuff, but Chris had some amazing stuff for us, man. Like it's so powerful. And for those that are actually taking his weekly outlook and doing something with it, I know they're extremely profitable. So take it away and help us to make sense of all of this.
Well, yeah, absolutely. I mean, not as I texted him, I said, "Hey, you stole all my thunder," because I talk economics. It's what I do. It's what I love. He did talk about a couple of things. There's one tiny correction: is Japan raised their interest rate, but it is to a number less than 0.1%. So anything 0.09, which would just classify as zero for how they factor interest rates. So 0% is where they're at. Technically, they have not been this way since 2016 was the last time they were at 0%. So that was obviously a major decision to move their interest rate, but it was spurred on by governmental talks on income levels. So government workers as well as other private entities in the country were invited to speak about making sure that wages could hold inflation. Then you had Switzerland, which is the first country to cut rates out of the big global seven. New Zealand was the first one to raise rates prior to the U.S. Fed, and Switzerland cutting rates, mainly because their inflation has fallen, and they felt that a rate cut would be necessary and would hold on, which is what we're looking at in the for U.S. economics as well. The other thing is in the U.S. this week, we do have on Thursday U.S. GDP coming out, both quarter over quarter and month over month. We're anticipating and forecasting that it would be 3.2%. Quite honestly, I personally feel we may see a miss there. It could it be better than expected? Absolutely. But I do believe that we are going to see, just as Jerome Powell said in the speech, that we would see more than likely U.S. GDP continue to decline until we're back at that 2%, which is where the U.S. lived forever in the 90s and early 2000s, prior to the 2008 economic crisis. The other thing, in looking at the stock market, and I had an amazing conversation with a personal mentor of mine. I'll just leave it at that. But this person, they represent over $1 trillion of trading and investing in for a major bank and organization. We talked about NVIDIA and their earnings, the S&P, and he said the same thing. While the old Maynard Keynes quote, right, the market can remain illogical longer than people can remain solvent, is very, very true. He sees a melt up to around that 6,000, and he calls it a melt up because this is momentum based. This is that joyful at the good times roll kind of deal. But when you start breaking down some of these bigger stocks that have pushed the market higher and higher and higher, it's all been through increased profit, not increased sales. And I've been going through NVIDIA's 10K, and just to give you guys an idea, their 10K is approximately, how many pages is this? I believe it is 96 pages. So, and reading through, most of this 96 pages as of right now, I can see that their sales numbers, the number of units sold, and their net turnover rate isn't as high as it was 3, 4, 5 years ago. I like to compare it pre-COVID, post-COVID to see, hey, what were they doing? What was the big fuel that pushed them higher, that they've benefited from, and what are they doing now? One of the things that's interesting is that they have gone into software development that requires you to use their chipset for the software to power AI. So they do have the first they're the first to the table with this kind of technology and holistic closed-in program, which I'm a very big fan of. Just look at companies like Apple, right? There's a very similar story, end-to-end user experience, closed in, no free development there. And you're seeing the same thing, NVIDIA taking the same position. So do I see it pulling back? Absolutely. I 100% agree with Chris on that from the technical side. Do I see there being a change in kind of a changeover in the market? Perhaps we may go flat for the year. We may melt up to 6,000 for the year. I don't see any big corrections before the end of the year, but who knows? It is an election year. Things could change. The last thing I want to talk about is kind of an interesting thing that I've been following really quickly, which is and how it will not affect the stock market or crypto market directly, but an indirect effect of it, which is the housing market. So a couple of months ago, almost a year ago now, there's a class action lawsuit filed against the National Association of Realtors called NAR, and for a couple $1 billion, $411 billion was the settlement case, was the settlement for that. And so they basically are reducing realtor commissions, as well as realtors will no longer be showing, like, if you walked in asking for a house for $300,000 and they showed you one for $500,000 and they pushed you into that $500,000, they're no longer going to be able to do that, according to their fiduciary laws that have just changed. So it'll be interesting to see how that affects home sales, what the end of it looks like. These changes don't go into effect immediately. Obviously, there's always some time and red tape to work out, but sooner rather than later, prior to the end of the year, we'll see these changes implement. And so keep your eye on pending home sales, as well as new home sales and older home sales as well. So those are three economic things to kind of keep a lookout for towards the end of the year.
I love it. And so when we talk about this market, this real estate market and AI and all the rest of that stuff, are you tracking that AI with real estate and all the rest of that stuff? I mean, do you see that as being a big impact?
So AI is the big buzzword of this year, which, every year there's a big buzzword of everything. But I do see AI as a more impactful job creator and job replacer in our economy, especially. So anytime you think of new technology, like when robotics came into manufacturing, they laid off a lot of manufacturing, but it created different jobs, right? People to work on those robots, program those robots, and work on those manufacturing plants. Less people. AI, Google just laid off 30,000 employees. It's not a typo or a misspeak. 30,000 people lost their job because AI could do their job for free. So you're seeing, I think IBM is going to be laying off people. Amazon's laying off people. Everybody's laying off people as they switch to AI. So there's going to be a need for people to learn how to use AI, harness its power, learn how it can work for your business and your industry to prevent you from being quote unquote redundant, because now you can program. Jensen Huang, who is the CEO of NVIDIA, he said something that I think is very, very true. Programming like we think of it, computer programming as C++ and Dragon and all these other kinds, it's no longer that. Programming is now English. How can you tell AI on how to program what you want to program? And so, yeah, I do track it. Real estate, I track. Another thing that we've talked about, Brandon, is the downturn in a stock market. Imagine if you never had to participate in it, because I actually just did. I was working with another family outside of another family that I met recently, and they had a newborn. They are putting $250 a month away for this newborn now, and when that child is 65 years old, he'll have right around $3.5 million to retire with cash, and at 18 he'll be able to have right around 100 or 195,000 or something like that to pull out for college at a 0% interest rate, and technically doesn't have to repay, but more than likely should and would repay, so that their retirement looks better. So it's an amazing thing. These couple of different tools that I'm using and for individuals and families.
I love it. I love it. Let's keep going. Let's keep
Yep.
educating and let's keep learning. Thank you, buddy.
Absolutely. Have a good one.
All right. So, the next thing we move on to is the core four report. And a lot of times, this is where things can get to be interesting because you're learning about how you can have custody of your funds and what you can do with it. So remember, core four is four things. Mindset, number one, trying to understand that you can get away from your 9 to 5 ceiling that you have. And then number three is looking at the kind of investments that you make. And we talk a lot about active investments at Core 4, where you're actually getting a monicum of education and then you're doing something with it. And then finally, we look at retirement. And so obviously you just heard James talk a little bit about retirement and what you guys should be doing. We all should be thinking that way. I was just talking to a young man earlier this weekend, and I was just saying, really, I'm moving away from the 529s. I'm moving towards insurance products for my kids for their education. I'm moving towards making sure that I have something in place for myself. And that is the mindset of getting away from the 401k and the dollar cost averaging into the 401k. There's lots of evidence that should give you the reason to just kind of do your own due diligence and just talk to James, put one up against the other and say, all right, if I were to have the type of insurance product that James is actually selling versus if I were having the same type of 401k that I've had or the 529, what would fare better in 10 years, in 15 years, in 20 years, where you're consistently making a deposit in there? And I think that you'll look at things a lot differently because the way that things are marketed to you, they're marketed to you as fact. And so when you hear that fact, you then say, oh, that's just what it is. And so you accept it. And so that blind faith that you're operating on is what's driving dollars into people's pockets where there's really some better options out there that you're just not used to, or maybe they just don't care to do the same level of marketing. And so that's why we're here at Core 4 to help stimulate your thought. So the next part is we do three things here for that active investing. The first is we do the Forex. So we have a group that's obviously called Ghost Protocol. We're up over 1,500 pips now and holding for this year. So get involved. It's very inexpensive to do. We do this as an opportunity for you guys to be able to play with the market. You guys get to see what the Ghost Protocol traders are trading, and then you get to mimic their trades. And so you can do it with 10 cents, a dollar, $10, whatever you see fit. But the idea is that you get an opportunity to learn and earn and grow at the same time. Is it always perfect? Is it always going to be right? No, nothing is. But that's a part of learning and developing and making sure that your monicum of risk is something that's manageable. We're not financial advisors. We're just telling you here what we're doing, why it's working for us, and how you can make a difference in your life if you educate yourself. The second thing we do is binary options. And so, hey, we're looking for more coaches. Anybody out there knows anything about binary options, wants to talk about it, we're here at Core 4 to listen. Same thing with anything else that we're doing. And we're looking constantly for where there's self-custody and the opportunity for you to be the best version of yourself, learn, become a subject matter expert, and then make the kind of money that you've always dreamed of making. And that's what we're going to talk about at the close of the show, how in 1 year, you could start creating a path that you could become a millionaire, or at least six figures. So what we do now is we introduce you to our coaches. And so by introducing you to coaches, each coach offers a course. And so the course is an opportunity for you to get familiar with at a fair price with what binary options are and what yield farming is. And once you get familiar with what they've been doing in terms of their own level of success, then you get to choose, do I want to be educated on this particular topic? Now, last week, I'll go back to it. We learned that one of the coaches was not excited about the fact that the community with Core 4 wasn't interested in purchasing his particular product. It's okay. It's going to take time. This is why we're here every single week so that you can see what the results are, because there are so many stimuluses out there that is trying to get your money for whatever it is. We're not trying to get your money. We want to prove to you that we're doing well, that we are growing, that we are consistent, and then from there you make your own decision. And if that speaks to you, then if one of the coaches speaks to you through this call, through this time that we're together, through these weeks and months and years that you'll be introduced to them, then you make a decision for yourself and you start to change your life the way that our lives have been changed here at Core 4. So without further ado, today we're going to start with yield farming. So let me bring Eric Majors on. How you doing, buddy?
Hey man, how you doing?
And I'm doing okay. I can't say amazing right now, but I'm doing okay. So I wanted to, really be very laser focused here because I want people to get to know you. Obviously, I know you. I think you're great. You've done a great job with everything in your course, but I want them to learn a little bit more about your course and what to expect when they get your course. So we all know that the course standard cost of the course, I think, is now $2,600 or $2,800. Is that right?
That's
Did I
right.
see it? And now, with Core 4, it's 650. So thank you for that. And we want our community to take advantage of it. And so what I have found in my relationship with you is that not only have I found consistency and stability, but just a breadth of knowledge that you've been able to give on the subject of yield farming. And so tell us a little bit about the course itself. How long should somebody be able to watch the course before they would actually be able to get in their first yield farm?
Yeah, the course is designed to. I'm just going to share my screen here, if that's all right with you. The course is designed to enable somebody to get in with no experience, to get in and start trading within 5 hours. That was my goal, because there's only two other guys out there that really have a competent course on the subject matter, and their courses cost about $4,800, and you're going to be spending several weeks learning a lot of things that I try to get you through real quickly. So you get into course, this is what it looks like it's really a master class to get you up and trading within 5 hours, regardless of what your experience level is. So if you are unfamiliar with cryptocurrency, you can just go in here and take the crypto quick start course. Takes you about an hour and a half, and it shows you how to install all the wallets that you need. It talks about the exchanges. It explains what it is. I know it looks like a lot in here, but these are just like 5-minute videos, 10-minute videos. And then if you go back over here, you get into the meat, which is the liquidity pools, and it just shows you how to get into the pools step by step. So without any experience, it explains briefly what they are, and anything else that you need to learn, you can come back in. And every 2 weeks we have live meetings on the first Thursday of every month. So it explains it in here, and you click in here and you can get the link for that evening. So then we get on, and there's frequently asked questions. There's contact support. You'll get the phone number. There's a phone number. There's an email address. So there's multiple ways to get support for the course. That's what it looks like. And as I said, the whole point of it is to get you up and trading as fast as possible. So I want to just show you what to expect as an example. This is some pools that I'm in. I got about $22,000 having in here to work with. This is just literally yesterday afternoon. I went into these pools here, and I show you which pools to go into. I hold your hand, update pools and things like that. But yesterday at 2:30 p.m., I went into these pools. Okay, put my 22,700 in there. I had 362 left in my wallet, and then I'll just step through this here. Later on today at 8:14 a.m., I had $67 that I had earned from providing liquidity. And then by roughly the same time today, I had made $94 off of that 22,000. And then just a few minutes ago, I had exited one of these pools to change the positions around. And
Mhm.
so if you look at these numbers here, what this really equates to is that within um, just over 24 hours, I made $444 between the capital gain and my yield. So that's not bad. Now, I don't want to over say that you're going to get that all the time, but what you could expect is that you're going to at least get about 10% of the amount of money that you have in here. And if you have time and you can sit in front of your computer and check maybe, once every 6 hours or so, you can really boost that up. And, we're talking about, I just made $100 just in yield off of $22,000. I made that in a day. So it's, I mean, you can almost live on that
Yeah.
like if you
Yeah.
wanted to. So stop sharing the screen there, but that's kind of what the goal is. Now you don't have to look at your computer all day. You don't have to do anything. You don't have to really pay attention to what the markets are doing. Although I do check them, but it's not necessary for you to even know what's going on, because the whole goal is to earn interest or earn commissions on by providing liquidity to all the major exchanges.
Well, I think that's great. And, I'm a huge fan, and I see the safety in it. Obviously, there's risk, but, as I've learned, the juice is worth the squeeze, and kind of what we're doing is definitely been extremely valuable. So, basically, for my story, Core Four community, I got involved. I knew a little bit about crypto before. So once I started taking the course, within about 2.5 to 3 hours, I was in my first liquidity pool, trying, learning, and earning at the same time. And it's been fantastic. So you can expect to do, on the conservative side, think about doing 5 to 7, 8% a month. And, anything above that is just gravy. But I think that's a fair start for an active investor. Would you agree with that, Eric?
Yeah, I think you're going to by accident make more money than that, but as long as you just keep make sure that you're adjusting your ranges and just pay attention. If you just check it 5 minutes a day and just make sure you're in range, you should do really well.
So anybody that's interested in the course, I will give you guys the code. You must be a member of Core 4 first. That's $50 to become a member of Core 4. And then you obviously can get the course not for the 2,800, but for the 650. Eric, thank you for your time. We'll see you next week on the Core 4 show, but I'll talk to you during the week as I always do.
All right, blessings.
Thank you. All right, guys. So the next is, binary options. I mean, what can I say? I think I did mention, the Forex market and how we're doing. Binary options is, I love it. You got a situation here where the course that we're offering you is a fantastic course. It's an educational course. And yes, is there going to be risk? Yes. But the strategies that this young lady has been able to come up with that she's using is just outstanding, and so I'm very proud of her, and we're going to bring her to the show. India, how are you today?
I'm well. How are you, Brandon?
Okay, thank you so much for asking. So India, tell us a little bit about your course.
So really it's very straightforward. I go over certain patterns and how to actually manage your trades and also the trading psychology aspect behind it. Anyone who takes the course should finish it within about 2 to 3 hours if they take it all the way through. So most of the students have finished within a day. They get their completion, and then after they get their completion, they set a one-on-one with me. I make sure that they know how to actually apply those concepts on their own. And then we do a weekly review with everyone that's a part of the course every week, just to make sure that they're on track. And if they need help with any assistance as they go through their trading journey, they have everything that they need to be successful.
So you'll actually give them time to do the course.
Mm-hmm.
You could have 5,000. You're going to set 5,000 appointments. So each person
Mm-hmm.
can actually, you can make sure that they have the overall concept.
Correct.
Okay, fantastic. So now that they are students of the course, they take the course, we've now met with them, they can either do it on their own, but you also have a Telegram. Is that correct?
Correct. So I give them access to the setup Telegram channel, and I show them how they can use the screenshots that I'm sending in the Telegram channel and apply it to their own trading concepts, and how they can actually make the trade for themselves. And so just giving them basically tips and tools to know what to look for and when to enter, for personal trades. Mm-hmm. So this is pretty much, so in that Telegram, I actually track everything that I do on a daily basis. So like they always say, demonstration is better than conversation. And I'm a huge advocate of showing results versus just talking about it. So when you join that Telegram, number one, it's free. Okay. And you can see the daily percentages. So this week, The winning percentage was about 71.4%. The profit this week was about 14.55%. So took 15 trades. Took 21 trades, won 15 trades. Okay. And this is pretty much the information for the course. If you are a Core 4 member, you can take advantage of the discount, which is Core 4. And yeah, the original price is $750, but all Core 4 members get it for $500. And like I said, we're here to build a community, make it simple for anybody that's coming in, whether you're a novice or experienced. You can use that as a foundation to help you, progress in your trading career.
So I think, one of the big things that we have here, we're attempting to add value. We've all been hustled with all of these programs out here and this opportunity, and this joke over here is making a whole bunch of money, so we better get in now, because if we don't get in, somebody's going to get in ahead of us that we know, and blah, blah, blah.
Mm-hmm.
So that's not what Core 4 is.
Mm-hmm.
Core 4 is really about helping you to become independently wealthy on your own, with education and with an opportunity to learn with a community of people that are doing the same thing, that are like-minded.
Right.
So thank you very much for providing this as an opportunity for the community.
Thank you.
All right. So here's the deal, guys. I'm not going to keep you guys. Every week, our goal is to talk and get to know each other. And so one of the big things that I want to talk about today is how you can start now and give yourself a six-figure income in a year. It's not easy, but there are ways that you can do it. You can integrate with both. You can take what you're making with yield farming. You can then take some of that money and put that into binary options, and you could do it the other way. You could do it with the Forex. You've got lots of ways that you can strategize on your own. But here's the deal. The word is compounding. So if you take the money that you're making monthly and you don't have to eat on it, if you do, that's fine. But if you don't, then you can actually use it to grow. And when you grow your account with compounding, your money earns so much faster, and it just starts to turn and turn and turn. Where if you had 10,000, just using that as a rough number, and then you made 20% a month, and you compounded that every single month at 20%, which is not necessarily that difficult to do with this act of learning and listening and investing that you would be doing. In 1 year, you'd have close to $100,000. Just 1 year. And so just think what that would be like if you had 2 years. And we're not even telling you to do that. I'm just telling you, just think about it. Just think about if you started with $100 to prove to yourself that you can do it. And so you have to build confidence. You have to learn how to trust yourself. So I give you guys fitness goals for any of you guys to comment and come and talk to me, because I want you guys to start looking at those fitness goals that you're hitting as ways that you can prove to yourself that you can do it. You got to be able to trust. And so beyond that, what I want you guys to understand is that when you strategize and then you diversify and then you get with Chris and you get with James, now you can start to look at your future differently, because A, you're in control over your future. B, you're with people that you can trust. And C, you get to live a life while looking up as opposed to looking down and behind you, because you're in control over your funds. So I can't reiterate this enough. I reiterate it every single week. People contact me every single week trying to figure out how they can get me and our community to jump in and join all of these other crypto platforms. If any of them come back, that's great. That's absolutely great. And I hope that they do, because I have got money invested in it that I can then pull out and then do this here, which unfortunately it's making more money than I would if I were to leave it in those platforms. So all you have to do is trust yourself and learn. Give yourself a chance. So 1 year, 6 figures. That's got to be the goal. So I want to see, my challenge to all of you guys is join one of our courses. Just start with, if it takes you 2 years to get to 10,000 or whatever it is, but just get to the point where you're making about 15 to 20% a month on your money, and then start your own challenge, and then create the testimonial, track it. So we're here to help you build. Give us a call, give us a comment, whatever it is, we're here for you. So we're going to close this call out early tonight. I just want to tell everybody, it's a jungle out there. You can do it. You can navigate your way through it. And I love you, whether you like it or not. See you next week.